increasingly difficult to utilize these platforms and provide income tax clarity to consumers and businesses that conduct business using digital currency. It's very clear that over the past 20 years, the Internet has been at the center of global economic innovation. Open platforms have transformed communications, media, software, education, commerce, and retail. But for a variety of reasons, the technology and business models around finance has been insulated from similar transformations. This same open platform approach in digital currency, specifically Bitcoin, presents an opportunity for the same level of innovation and advancement in forms of currency, trade, and payments that we've seen brought to bear on other industries. I don't think there's much debate that we need to see innovation and transformation in banking and finance, not just reform and remediation. Specifically, our payment systems are inefficient and very much built upon systems and processes that predate the Internet. The result is higher costs for consumers, lower margins for business, and less efficient economic interaction. And in many cases, our financial systems have excluded enormous bases of consumers who remain unbanked or underbanked. The combination of ubiquitous, Internet-connected mobile devices and digital currency presents a tremendous opportunity to expand access to financial services on a worldwide basis. Payments and money transfers are still operating in the pre-Internet era. Today, we can communicate to almost anyone in the world, including in video format, at no cost. We have instant access to an enormous amount of the world's knowledge, also effectively at no cost. We have instant access to more media than we ever imagined was possible, again, almost at no cost. Yet to send money between friends and family, whether across the table or across the planet, takes days and costs a significant amount in transaction fees. To accept payments, merchants must bear significant fraud risk. Consumer privacy is often threatened, and likewise it takes days for a merchant to actually receive money from an electronic payment, not to mention the widely perceived high costs of transaction fees. So what are we at Circle specifically doing about this? At Circle, we're building online services for consumers and businesses to be able to easily use digital currency, and specifically Bitcoin. For consumers, we intend to enable them to easily purchase, store, send, receive, and make payments using Bitcoin. And for businesses, we're providing tools to help them easily accept digital currency payments. We're fully committed to complying with all applicable laws and regulations and establishing comprehensive risk management protocols. We've registered with FinCEN as a money transmitter and are actively seeking appropriate licenses from U.S. state financial authorities. We're developing our platforms to provide very high levels of security for our users and employing industry-leading approaches to customer identity verification, fraud remediation, and anti-money laundering, designed in partnership with leading regulatory advisors and experts. I want to talk for a minute, though, about some of the risks inherent in digital currency platforms such as Bitcoin. First of all, as has been made amply clear from earlier testimony, I want to emphasize that I believe that U.S. regulators and law enforcement are justifiably focused on the potential use of digital currencies to finance criminal activities, including terrorism. But in addition to FinCEN's guidance and the appropriate requirement that Bitcoin operators implement Bank Secrecy Act provisions, it is also a risk if the government doesn't support innovative companies gaining access to U.S. banking institutions, which will drive companies offshore and overseas. Another risk is that businesses' adoption of digital currency will be hampered without clarification from the IRS on income generated from sales denominated in digital currency, and such guidance is also needed to thwart potential tax evaders. Without clear guidance on consumer protections required of Bitcoin operators, consumers and businesses could be defrauded through inadequate systems and risk management procedures around customer funds. Another risk is that the United States falls behind in this critical emerging economic innovation. Regulatory uncertainty could hold back American companies from participating in driving digital currency innovation. Indeed, today, a Bitcoin exchange in China has become the largest single trading exchange in the world, followed by exchanges in Japan and Europe. We need to uphold and support our incredible history in America of supporting technical innovation and entrepreneurship. In terms of U.S. regulation, it appears to me that federal and state regulators seem to have ample statutory authority to adopt regulations and take enforcement actions as necessary to protect consumers and ensure responsible conduct in the world of Bitcoin commerce, and that enforcement actions to date have been constructive. We stand ready to assist them in their ongoing efforts to adapt their regulatory tools to new digital currency. I believe we're at the forefront of another 20-year journey of internet-led transformation, this time in our global financial systems, and there's a real opportunity to foster that economic change while simultaneously putting in place the safeguards that only government can enable. Mr. Chairman, that concludes my prepared testimony. I'd be happy to answer any further questions.
Thank you, sir. That was a very, very helpful testimony. Thanks. Mr. Brito, please proceed. Welcome. We're delighted that you're here.
Mr. Chairman, thank you for having me here today. We're here today to discuss virtual currencies in general, but it is Bitcoin in particular that has so many interested in this topic. But online virtual currencies are nothing new. They have existed for decades, from World of Warcraft Gold to Facebook credits to eGold, and neither are online payment systems new. PayPal, Visa, Western Union Pay, these are all examples. So what is it about Bitcoin and similar cryptographic currencies that make them unique? Whatever one may think about Bitcoin's prospects for enduring value, it is safe to say that it is a remarkable technical achievement. Bitcoin is the world's first completely decentralized digital currency, and it's the decentralized part of that sentence that is really unique. Prior to Bitcoin's invention in 2009, online currencies or payment systems had to be managed by a central authority, whether it was Facebook issuing Facebook credits or PayPal ensuring that transactions between its customers were reconciled. However, by solving a long-standing conundrum in computer science known as the double spending problem, Bitcoin, for the first time, makes possible transactions online that are person-to-person, without the need for an intermediary between them, just like cash. This technical breakthrough presents potential benefits for consumers and the economy, as well as challenges to law enforcement. For example, because there is no central authority in Bitcoin transactions, there are little to no fees associated with those transactions, which especially benefits small businesses and price-sensitive consumers. And because Bitcoin is not a proprietary platform run by a single company, but instead it's an open network, entrepreneurs need no permission to experiment or to innovate new products and services. On the flip side, law enforcement has long relied on financial intermediaries to help them detect, prevent, and investigate illegal transactions. Because Bitcoin's transactions can have no intermediaries, and because Bitcoin transactions are not necessarily tied to identities, it is not surprising that we have seen Bitcoin employed in criminal transactions. In particular, Bitcoin has been used for the sale of drugs and in malware that holds one's data hostage. It's also not difficult to imagine how the technology could be employed in money laundering. Emerging technologies often present both great potential benefits as well as real risks. For example, 3D printing can be used to cheaply make prostheses and life-saving medical devices, but also undetectable firearms. Domestic commercial drones have the potential to revolutionize agriculture and shipping, but could also be used for stalking. The challenge for policymakers is to address the risks posed by emerging technologies while doing no harm to the innovative potential of that technology. In many cases where emerging technologies pose risks, there are already laws and regulations of general applicability that address many of those risks without the need for new laws targeted at the specific technology. This is the case with Bitcoin. While Bitcoin transactions do not require intermediaries, one must still acquire Bitcoins by exchanging dollars, and merchants that accept Bitcoins will very often use Bitcoin payment processors. Indeed, there's a fast-growing ecosystem of startup exchanges, payment processors, and wallet and escrow services that make up Bitcoin's burgeoning infrastructure. Each of these are already subject to regulation as money transmitters, including state licensing and FinCEN registration, as well as Know Your Customer and Suspicious Activity Report requirements. More to the point, serious criminals looking to hide their tracks are more likely to choose a centralized virtual currency run by an intermediary willing to lie to regulators for a fee, rather than a decentralized currency like Bitcoin that, as a technical matter, must make a record of every transaction, even if pseudonymously. While the online black market Silk Road, which used Bitcoins, is estimated to have generated less than $200 million in drug sales, the centralized digital currency Liberty Reserve is believed to have laundered more than $6 billion related to credit card fraud, identity theft, computer hacking, and child pornography. The reason Liberty Reserve, and not Bitcoin, was the payment system of choice for criminals online is that it was designed and managed by its creators to avoid Know Your Customer and reporting rules and to evade subpoena. As a result, the path forward that can best confront risks while ensuring that we can reap Bitcoin's beneficial potential is to allow the Bitcoin network and its surrounding infrastructure to develop, by making sure that entrepreneurial innovators can easily comply with existing regulation. The alternative, promulgating special regulations for virtual currencies or otherwise making it more costly to operate legitimately in this space, could have two unintended consequences. First, it might mean ceding the network to exclusively illegal use and foregoing any visibility that law enforcement could otherwise gain into the activities of compliant firms. And second, the United States could lose its head start in what may be the next breakthrough industry if it establishes a regulatory regime that hampers Bitcoin, while other countries, like China and Canada and Germany, look for ways to develop workable regulatory frameworks for Bitcoin. Finally, as regulatory and law enforcement agencies seek to apply existing laws to Bitcoin, they will face the challenge that Bitcoin is not a company with an easily identifiable executive, but instead it's an open source project and a community. The Bitcoin Foundation is central to that community, but it does not encompass the whole community. So as new guidelines and procedures are developed, policymakers should make sure to engage the community and solicit comments from the public to ensure that they benefit from a wide range of perspectives. Thank you for your time, and I look forward to your questions.
Well, thanks very much for joining us today and for that testimony. If you were here during the testimony of the first panel, you heard me indicate that one of the things I like to do in when we're addressing an issue like this, around which there's not a great deal of consensus, is to use these hearings as an opportunity to see if we can develop some. And I thought we made a little progress with the first panel, and I'm hopeful that we can do that, replicate that with the second panel of witnesses. Toward that goal, let me just ask you to reflect on what you've heard from your colleagues on this panel, and just tell me and the staff members that are here, whoever's watching on television here in the Capitol or outside the Capitol, where do you see the agreement among the four of you? The perspectives you shared with us, the opinions that you shared with us, where do you think there's general agreement? Second question, where do you think there's not agreement? And how do we go about reconciling that lack of agreement if we can? Mr. Allen, you want to go first?
Senator Carper, I think there is broad-based agreement about the potential of a digital economy and virtual currencies. I think there is absolute agreement that there is enormous potential for social good and that this is an emerging technology that needs to be protected. I also think there is clear agreement that we can't just ignore the misuse and that the misuse of a digital economy and virtual currencies jeopardizes the viability of virtual currencies, you know, in the longer run. So I don't think there is disagreement at all on those points. As it relates to areas, I mean, I also don't think there's a disagreement on the need for basic regulation using the existing tools, the application of AML, the application of money transmitter laws at the exchange level, know your customer, you know, those kinds of provisions. I think maybe the greatest challenge, the greatest area that we have to grapple with is how do we enforce the enforcement techniques to deal with the misuse while preserving the potential long term, and the fact that this truly is a global phenomenon. This is something that the FinCEN guidance on this was just issued in March of this year. The FATF guidance that Director Shasky talked about, the Financial Action Task Force, their guidance on this issue was just issued this summer, I think in July. So my sense is that most of the world is not applying money transmitter laws, is not applying any money laundering principles. So I think the question of how we get from here to there regarding an area that there's not great knowledge and understanding about is really the issue that the four of us would have to grapple with.
Thank you. Same question, Mr. Merck, if you would, please. Where do you see consensus agreement? Where do you see a lack of that, and how do we go about reconciling that lack of agreement or consensus?
I'll take the second part first. I don't know that I heard a lot of disagreement or anything that we would generally disagree with from this panel, or even really from the first panel. I was heartened by that. I think that Ernie is correct, that as we move forward, I think that an open dialogue is good, so that as those disagreements do crop up, and they likely will, we can address them quickly and in a safe and sane way. As to where we have agreement, I think what I heard from the other panelists is there's a real need to create on-ramps into the traditional financial system, that by creating those on-ramps, especially here in the U.S., you help to protect the system from abuse. The biggest obstacle to that happening today is not from regulation or from law enforcement, it's from the ability of businesses in the space to get bank accounts and to get integrated into the banking system. There is currently a chill in the banking system and in the banking industry that is preventing businesses from getting just simple, even simple checking accounts. There are stories that if you have the word Bitcoin anywhere in your name or your documentations, you will immediately be, your application will be immediately placed in the circular file, as it will. So I think there's a need to create some leadership within the banking industry to make sure that these companies are onboarded into the traditional system where some of the protections are in place already and the illicit activity can be detected and rooted out.
Good, thank you. Mr. Allaire.
I'd like to echo some of the other panelists' comments. Clearly, there's consensus here around the innovation that we see, the potential for financial inclusion. I think there's consensus that many of the regulatory frameworks and tools are sufficient and being applied appropriately. I think there's consensus that the open nature of this technology, its development, its use, and its oversight is a very positive framework. I do think that there is some tension around the question of the balance between anonymity and privacy, and whether there are new laws that are required to end the possibility of anonymity on the Internet, or to address that in some way. I think, as I stated in my comments, we are very focused within our business on having very deep levels of identity verification, and so we view that as critical. But others within the digital currency world, particularly within geographies that don't have the same kinds of regulatory regimes, may not. And are there other things that we need to be thinking about, other tools that we need to be thinking about for law enforcement that can address some of those issues? So I think that that arena needs additional and careful consideration.
All right, thank you. Mr. Brito.
So I think there certainly is broad consensus among the panel up here, and I was very heartened to hear the first panel's message, and I think we have a lot of consensus. I'll pick two issues just to give you an answer. First, where is there agreement? I was very interested in listening to the gentleman from the Secret Service who said that, in fact, it is centralized currencies that pose the greatest risk as far as money laundering and other illicit uses, and that decentralized currencies like Bitcoin, because of their nature, were not a greater risk. I think that was a great point of agreement there. To pick a point of disagreement, Ms. Shasky sort of took issue with the idea that U.S. businesses might move overseas seeking a better regulatory environment. And I think what her suggestion was that if somebody leaves the U.S. seeking lax regulatory treatment, they're going to find that eventually it's going to catch up with them. And I think the danger is not that somebody who's trying to facilitate an illicit business is going to leave the U.S. The danger is that real hardworking entrepreneurs who are looking to comply just don't find a regulatory environment that is amenable here. That's something that we don't want to allow us to stretch for too much time.
Okay, thank you. I want to go back to Mr. Allen. I think you mentioned the guidance issued earlier this year by FinCEN. And I'm not going to ask this. I'm going to probably ask Mr. Allaire to lead off and respond to this question. But they issued their guidance earlier this year, I think back in the spring, and they stated that virtual currency exchanges and administrators would need to register as money service businesses and apply for money transmitter licenses in the 48 states that require such licenses. I want to ask you just to focus on this with me for a little bit. And I ask you, each of you, again, some of you already alluded to this guidance and given it some thought, but I just want you to give me just again your thoughts on this guidance from FinCEN. Do you believe that the approaches are a good fit for virtual currency exchanges or other virtual currency related businesses? And Mr. Allaire, I'm told that your company has registered with FinCEN and has applied for money transmitter licenses in a couple of states. And so you could maybe, if you would, just offer the first response.
Sure. You know, I think a business that is going to handle consumer funds, store and manage those, and is going to interact with the banking system should be compliant with the rules that have been set forth through the Bank Secrecy Act to protect consumers and ensure that bad actors are not able to operate. So I think, in general, we very much think that these are appropriate guidelines, and I think the digital currency business is, from an entrepreneurial perspective, may be different than other prior internet businesses. You know, two guys can build a photo sharing app and put it up on the web and get 1 billion users. I don't think it's appropriate that two guys should be able to build a financial services business and operate that without a sufficient investment to protect consumers and protect society. And so I do believe that the bar needs to be higher for financial services businesses in the United States, and that it is not realistic, which I think some in the entrepreneurial community would like to see regulation which doesn't require that level of compliance. I don't think that's realistic. When I founded the company and sought capital to build this company, we understood that the bar was higher, and we raised sufficient capital to be able to launch our product and service in a compliant manner and hire the professionals and staff and put in place the systems and protections that were critical. So we think it's appropriate. There are challenges with how money transmission licenses are granted in the U.S., the broad number of states, the divergent approaches that each state might take, and I do think that creates cost and complexity and could be argued to be an unnecessary regulatory burden, but that is the system that we have, and that is the system that we are pursuing and operating within.
Good, thanks. Others on same issue. Mr. Allen, you want to?
Yes, just briefly, Senator Carper, I agree with Mr. Allaire totally. And what I think is most appropriate about the FinCEN guidance is that it is focused at the exchange level. It does not apply to users, only to those. It's an application of basic money transmitter law, and I think it is an appropriate use of the law, existing law, and I think it's a reasonable approach. I agree with him that one of the great challenges is creating consistency and uniformity because of our federal system and the fact that there could be 50 different approaches. But that's not unique to this issue.
Okay, thank you. Mr. Mark, any thoughts, please?
Yeah, the 50-state money transmitter license regime has come up. I do think that the states have an interest in protecting their consumers. At the same time, it is a bit burdensome, and it has slowed down progress in the U.S. I don't know what the answer to that question is. I know in the EU they have a system of reciprocity where they have a minimum threshold for each country, and if you attain a license in one country, you can passport it to other countries as well. Perhaps that's a framework that would work here, but that would be best left to the legislative branch.
All right, thanks. Mr. Reeder, any thoughts?
One small point regarding the FinCEN guidance. I think it's very clear as it applies to exchanges and to administrators of centralized virtual currencies. I think it's less clear when it applies to users, for example. If the guidance says that you are not required to register with FinCEN if you are acquiring, say, Bitcoin in order to buy goods or services. But let's say, for example, that my mother's from Spain, and recently I helped her send money back home, and it cost 5% of the total amount. What if I was buying Bitcoin simply to remit money overseas, as could be one of the great potential benefits to allow remittances to the third world? and to other countries. That is not covered by the FinCEN guidance. So I think the guidance could use further explanation, and I think if FinCEN were to put any further clarification up to public comment, they would, I think, get all the wrinkles out.
Okay, thanks. Let me come back to you if I could, Mr. Allen. I understand that your organization, International Center for Missing and Exploited Children, was one of the forerunners in bringing together private and public stakeholders to talk about virtual currencies. If you would, first, a couple of questions, but first, who was involved in your working group and why did you form it?
Mr. Chairman, we formed it because several years ago we had a very positive experience in bringing together financial industry leaders around the fact that the mainstream financial system, the mainstream payment system, credit cards, were being used for the purchase and distribution of child pornography. I called the chairman of a major credit card company and said, how is this possible? And he said, we don't know what these transactions are for. If you can find for us, show for us where the merchant bank is, where the account resides, this is an illegal use of the payment system, we can stop the payments, we can shut down the accounts. So we brought together coalitions in North America, Europe, and Asia, and had enormous positive impact. There was a dramatic decline. But as I began to talk to law enforcement and other leaders around the world, what we determined was that we didn't end it, we just moved it. And we were seeing evidence of a migration of these kinds of illegal operations into this new economy. And so in an effort simply to try to understand it better and determine if it was a problem, to use that same model to bring leaders together, private sector leaders together, to try to develop shared common sense solutions. That's why we joined with Thomson Reuters to create this task force. And it includes the Bitcoin Foundation, it includes the Tor Project, it includes the Gates Foundation and the Brookings Institution, the Cato Institute, Vital Voices, a human rights group. It includes multiple law enforcement groups and representatives. The intent was to bring people together, better understand the problem, and search for common ground. And so that's been our process.
Mm-hmm. Let me just follow it up. And you've partly answered this question, but I want to ask it anyway. But just share with us a bit further what you've been able to learn from the dialogue that you facilitated, especially as it pertains to the exploitation of children around the world.
I think we've really learned a lot in a short time. One of the challenges is most of the evidence is anecdotal because relatively few cases are actually being made. As we've talked to law enforcement, I talked about that earlier in terms of the absence of investigative techniques to probe these kinds of things. But I think we have learned that there is broad-based interest in searching for and finding reasonable solutions that work. We have learned, I think, as was pointed out earlier, that the digital economy is far broader than Bitcoin. So the issues we're focusing on are not just Bitcoin, but, for example, there are 22 million users today of Russia's web money. We have talked about Liberty Reserve and the case that was made there, $6 billion in illegal money laundering. So I think we're discovering it's a complex issue, but I think it's one that is addressable. And I think the most encouraging thing to me is I now believe it's addressable using many of the tools and laws that we already have in place. That one of the biggest challenges for policymakers is simply to increase the level of awareness so that countries around the world will begin to use the tools they already have.
Well, that in part is the reason we're having this hearing. Oh, good. I was talking with a fellow who goes to the same church as we do back in Delaware the other day. He's in the auto business, sells a lot of cars. He's has dealerships, sell a lot of cars in our state. And he was talking about the work of the Consumer Finance Protection Bureau, established a couple of years ago. hopefully to look out for the interest of consumers throughout this country in a lot of different ways. But I want to focus just a little bit on consumers, if we could. And I've been told that virtual currencies pose a number of questions as to their use by consumers. And I have maybe two questions, but the first is, maybe we should go down the panel, or go up the panel. Mr. Brito, we'll start with you. And if you will, just give us some of your thoughts on whether virtual currencies have sufficient protections built in to them for consumers. And do virtual currencies raise any additional new issues for consumer protection? For example, do we need to do anything to better protect consumers from fraud or to protect consumer privacy as a result of these virtual currencies?
So I think that this is a very nascent industry and is still trying to find its way. As a result, that means that the folks who are at this point participating in this economy really have to try hard to participate in it. So these are not your average consumers just yet jumping in to this space. So at this point, I think it gives regulators some time to learn more about the technology and learn more about what the industry players are doing to address these concerns and whether the existing consumer protection laws are enough. As far as opportunities, what's interesting about especially decentralized digital currencies is that they provide a new choice for consumers. Today, if you want to use electronic payments, you're probably going to be using a credit card or something like PayPal, and that comes with fees, sometimes high fees, and those fees are important because they provide things like insurance. If you have your identity stolen, or if something that you received is not what you ordered, you can always have that charge reversed. Decentralized digital currencies are like cash in that there's nothing to reverse, but that also means that there are very little fees. So this now presents a new choice for consumers. They can choose insured but more expensive, or not insured but less expensive. That's a new choice for consumers that wasn't there before.
Okay, thank you. Ms. Olair?
I think there's many issues around consumer adoption of digital currency. I'll touch on a couple of them. We emphasize that Bitcoin as a digital currency offers great potential to lower the fraud risk that both consumers and merchants face on a day-to-day basis when we conduct payments. When we go into a restaurant and give our credit card out, or when we enter that information online, we're effectively giving out the keys to our bank account to every counterparty that we interact with. And so it should not be a surprise that we've seen dramatic growth in the amount of identity theft, and specifically financial information, private financial information being stolen and sold on black markets and used for nefarious reasons. Protocols like Bitcoin reduce that risk because the keys to your bank account, the keys to your money, are never transmitted. And that's one of the brilliant aspects of the design of the system. And so there's real potential to lower occurrences of financial fraud in consumer transactions and increase consumer privacy as a result. So I think those are really key benefits. But there are risks, clearly, for consumers. I think one risk, and this is one that we take very seriously as we look at this, is increasingly, because of ease of use, consumers that want to take advantage of things like Bitcoin are using online services that essentially host their Bitcoin on servers or on the internet. And because Bitcoin itself, the mechanism by which funds can be used is based on keys that we then in turn would store, there's a real risk around the security of funds. And we've seen occurrences just in the past weeks of startups who did not have appropriate levels of security around those funds, where those funds were effectively stolen. And so I think there's really critical requirements around the safeguarding of funds, the custodianship of these keys, and best practices and methods to employ that. I think industry is driving forward on that, but I think that's a key issue that the CFPB may take a look at. I think there's the flip side, which is this question of what I would call merchant fraud, which is the chargeback scenario. You didn't get the product, you got the wrong product, someone had inappropriately used your account. I think that there are methods for addressing that within the technology of Bitcoin today, and within improvements that are coming in upcoming versions of Bitcoin, mechanisms to create refunds to consumers, mechanisms to provide greater transparency around what you're paying for, and there are mechanisms even that are not well understood, I think generally, but which will become available, where funds can be held in escrow until a product has been delivered to a consumer. So there are ways to address some of that merchant fraud risk as well, and I think you're going to see industry participants pushing forward on that in the coming months and years.
Okay, thanks. Mr. Merck, any thoughts?
Yeah, thanks for the question. There are consumer protection issues in the Bitcoin space, and I'll reserve my comments strictly to Bitcoin and decentralized currencies. When you look at Bitcoin especially, we haven't even released version 0.9 yet, so we're not on version 1.0. It's very much still an experimental currency, and it should be considered a high-risk environment for consumers and investors at the moment. That's changing over time as businesses like Mr. Allaire's and others are coming into the space and building the service layers on top of the Bitcoin protocol to make it safer for consumers to move in. Those service layers are both technological. Bitcoin has been referred to as programmable money, so you can build in layers of escrow and dispute mediation and things like that right into your payment structure, which is a very interesting concept. As most of the laws that exist for consumer protection in the payment space were built around traditional methods where those weren't possible. So potentially you don't need as much regulation on the consumer side in the long term to the midterm as this system grows up. In the short term, consumers should be aware that this is a high-risk environment and that potentially it's not quite ready for mass consumer adoption today. That time is coming, but it's not here yet.
Thank you. Mr. Allen.
The other panelists are the experts, so I don't think I have much to add other than to say one of the groups we met with on this were central bankers and financial industry leaders, and they clearly view, as I think the other panelists do, virtual currencies as akin to cash. So there is no FDIC. There is that not that level of protection. So I think it has to be viewed as high risk, and I think the points that the other panelists made about the fact that consumer protections are part of a work in progress, but certainly something that we need to be very much aware of.
Okay. In anticipation of this hearing, I was asking the members of our staff, I said, tell me a little bit, where did Bitcoin come from? Who was the creator? Who are the creators? And I'm told that the protocol was developed either by maybe a programmer or by a group of programmers that go by the name, I think it's Satoshi Nakamoto. Is that correct? Okay. And with all the money and attention that's been given to Bitcoin, it just seems strange to me that either this individual or this group would choose to remain anonymous. What do we know about this person? What do we know about this group? Does it matter that his or her or their identity remains a mystery? Mr. Breeder, do you want to? Who wants to go first? Mr. Merck, you want to go first? Go ahead.
I'll go ahead and field that one for everybody. Yeah, Satoshi Nakamoto is the pseudonym for the creator or creators, he, she, they, who developed the Bitcoin protocol and released the original white paper, the spec for the Bitcoin protocol into the world, in addition to the original code base that was then open sourced to the entire community. This person or group of people has since left the scene, as it were. At least, if not more than half of the code base from that original code has already been rewritten. While I think everybody is grateful for that incredible contribution, at this moment in time, who Satoshi is largely irrelevant to the story of Bitcoin going forward. And I think that was intentional, and possibly why a pseudonym was chosen in the first place.
All right. Anybody want to add to that, please? Rito?
I just want to address, it is a little strange that the Bitcoin, we don't know who the creator is. And so that often conjures up the idea that there's some risk here that we have not.
You don't think it was Al Gore, do you?
You know, he's never denied it. But I think the key thing to emphasize is that Bitcoin, especially the code base, is open source. That means it is completely open and audible and available to anybody to look at. And in fact, many very smart programmers and cryptographers have looked at it and have given it their seal of approval. And as Mr. Merck said, more than half of the code base has been written by others than Satoshi at this point. So, you know, I'm pretty confident that the software is what it says on the tin.
All right. We're just about to start voting over in the Capitol. So I think we'll wrap it up by. I just want to say, I love to quote Albert Einstein. Not all my colleagues do, but he said some just really memorable things. One of the things he says: "In adversity lies opportunity." Think about it. In adversity lies opportunity. God knows there's plenty of adversity with respect to these virtual currencies that we've talked about. It's not just potential, it's not just possible, it's real. And we need to be not just mindful of that, but vigilant to make sure that we contain it and eliminate it where we can. I understand, I only know one quote from that's attributed to Mrs. Einstein, and I find it sort of relates to my efforts to try to get my head around this whole issue of virtual currencies and Bitcoin. Mrs. Einstein, who apparently was quite brilliant in her own right, and was once asked if she understood her husband's theory of relativity, and she allegedly responded, I understand the words, but not the sentences. Think about that. I understand the words, but not the sentences. When I first started trying to understand what this was all about, I sort of felt like Mrs. Einstein and said, I understand the words, but not the sentences. With the help of our first panel and all of you on the second panel, and with the help of my staff and a lot of other folks that have come by to brief us, I'm starting to understand more than just the words, but a few of the sentences too. And that's really why we wanted to hold this hearing today, to better understand what's going on here, the pitfalls that come from this technology, but also the potential value to our society, to consumers, and to businesses. And I said earlier, I thought the first panel, I thought they gave us a lot of thought-provoking information. I thought they were very thoughtful, and but it's also encouraging. It was encouraging, and I find that that's been true here with this panel as well. So for that we thank you, and on behalf of my colleagues who are not here, who are flying in from all over the country right now in order to make this 5:30 vote, I thank you. They don't know I'm thanking you, but I'll thank you in their absence. Someday they'll thank me for thanking you, I hope. But we have a bit of a shared responsibility here in trying to figure out how to make this work so that we minimize the bad that can flow from it and maximize the good. With that, I think we'll wrap it up here. And I'm going to just to note that the hearing record will remain open for 15 days. That's until December 3rd at 5 p.m. for the submission of statements and questions for the record. I suspect we'll have a few, may have a few from me. If you receive those questions, I would just ask that you respond to them promptly. Again, to our staff, especially John Collins, who first brought this to me months ago. I want to thank our staffs, both majority and minority staff, and for you and for our first panel for joining us today and for the work that you've done in helping to enlighten us a bit on this subject. With that, we're adjourned, and thank you so much.